Welcome to TradeTheMBI.com. This is John. This report is for the 21st, and welcome to winter as well. It's the shortest day of the year. Don't know that that's going to affect trading per se. We can still see a nice continuing rise, though, but look at that. ABM is getting a bit more aggressive as we get a little bit softer into this. Now, if we were going to see a continuation lower, we would have had the orange dip here between cyan and green and red. There's not a whole lot of space, so it's still fairly, I think, bullish consideration, because with the steel reset, then any slight uptick is going to generate new highs and continue to propel us. All in line, we can see shakeout still way overdone, but needless to say, as long as we've got the secondary items down here continuing to rise, still in decent shape until that starts to ebb and roll over. I think the last time you saw it was right over here. And it starts to get flat, but then once it starts to move down and then you go into your flat line, that's when you're going to get your decay. Not likely before then. NQ catching up overall. I mean, it's improved significantly. Nobody's catching the Dow, and the potential for huge stimulus for major manufacturing is going to be significant going down into the future, assuming it doesn't hit roadblocks. Never mind 20 trillion in debt that already exists. The euro going to continue to languish a bit, though it's still, again, they're fighting to support this. You would think that we would have already lost parity at this particular point, given the easy money in Europe and the increase in U.S. rates, but still holding on, and that's an important one, because if it gets too bad, it really impacts S&P, and so that's, I think, been a little bit of a drag, not a whole lot, but because you have to have the growth in the U.S. to counter it, and you haven't really started that. I mean, fine, things have stabilized to some degree, but when you're still spending, $500 billion deficits or more and barely getting any growth out of it, you've got problems still. So we're going to have to see how that transitions. But TLT, again, should be heading to my 113 range. It's just a matter of time. We're just going to have to wait for it. Still stability with oil right in this range, and this becomes sort of a sweet spot for it. Not too low, not too high. It's that Goldilocks setup. And gold, I think those who've written off gold might be a little premature. I know that with the changes in India, and that has really thrown a shock into the overall setup of things, but it certainly will come back, particularly as inflation can begin. We've had a lot of years where it hasn't. There's still going to be this same talk about, everyone saying that the labor doesn't exist to ramp up the U.S. economy, and I think that that's a misnomer. We'll see how that plays out. I know they think that 4% unemployment rate is real, and that there really isn't a lot of slack as far as labor capability, but we're going to find out, and I think that they might be surprised how it's absorbed. Gold, though, so lowering down right there to the ABM as I just moved that to match it. Still huge, minus 30 in the shakeout. That's no recovery whatsoever. So we had the nice increase, a little end day short that developed there, and then we ended up with our dip below the orange line, and then boom, the dip right here took place under the steel below the red, the magenta 7.5 range. That was down at 58, and then we shot all the way up. So that was about 10 points. Not bad. Started off fairly easy and just kept escalating. There was just nowhere else for it to go. We didn't get overbought until the peak, so that wasn't much to retrace. That was all the way right up here. So doing beautifully. It's a short day. Literally. So we'll just keep taking the signals that come, as soft as they are. It's just going to be a slow ebb. There's nothing you can do about that. I know they were getting all excited that it was like this massive increase, but no, it's steady as you go. And people are playing for that yield because there's just nowhere else to do it. Now, I think at the end of the year, next week, we could start to see a little bit more volatility because profit taking, things like that, time to lock in the season and be done at that point. So it's amazing how you get to this point where you're chasing yield and then it becomes a tax and everything else issue at the end of it. And boom, things just change dramatically. So we will keep an eye on that. As always, though, do look for me on the Skype chat. Trade well.